Hi, this is an accounting video for chapter 16-3. I'm on the main page of our MindTap accounting website. I'm going to go to part 2. I'm going to find my way down to chapter 16, financial statements and closing entries for a corporation. And I'm going to make my way to lesson 16.3, preparing a balance sheet. And I'm going to select end of lesson review, and I'm going to go to working papers 16.3. I'm going to be working on 16.3 work together. In 16.3 work together, we have 4 different steps. The first one is to organize our thoughts. The following list of accounts is taken from Superior Corporation's adjusted trial balance. We need to go ahead and identify which of these columns these accounts fall into. And to begin with, what we're going to have is we're going to start with, let's start working left to right. Let's work left to right. So we have our current assets. Our current assets are composed of our cash all the way down through our interest receivable. These are our current assets. Next we have are the plant assets. And the plant assets are going to compose of office equipment all the way through accumulated depreciation of store equipment. So office equipment, store equipment, and then the depreciation of those accounts. Then we'll discuss the current liabilities. And with current liabilities, we're going to go from our accounts payable all the way down to our capital stock. These are all considered to be liabilities. Then the next column are our long-term liabilities, and we're not going to have anything for long-term liabilities in this case for our balance sheet. Then we're going to have our stockholders' equity, and that's going to include our capital stock and our retained earnings. Too far there. Then the next thing we've got our dividends, which is going to be dividends all the way through our interest income, which is going to compose our not on our balance sheet. So any of these things here, from our dividends all the way down to our interest income, is not going to be included on our balance sheet. And that's going to take care of step number 1, where we're kind of organizing our thoughts and identifying which accounts are going to be included in the balance sheet and which ones are not. I'm going to go on to step number 2 at this time. On step number 2, we're looking at the balance sheet characteristics. So we've got a few questions just to talk about, again, those characteristics, those defining factors of a balance sheet. So the first thing we've got is the amounts for the balance sheet are obtained from which 2 sources? Well, the 2 sources that we're going to be pulling information for our balance sheet are the adjusted trial balance and then the document we just completed in 16.2, which is the statement of stockholders' equity. The next thing we've got is the assets related contra account balance is, and it could be a few things, added to, deducted from, or not affected by the asset account balance to determine the book value. For a business like this, it's going to classify its assets as current assets and plan assets. A business owning both current and plan assets usually lists them under separate headings on a balance sheet. A corporation like this is going to list their asset accounts that have related contra accounts. They're going to be reduced by the related account on the balance sheet. So the difference between an asset's account balance and its related contra account balance is known as our book value. So it's going to be the difference between these two. So we're going to go ahead and say deducted from. Next thing we've got is of the following, which amounts should receive a double rule? And those accounts that are going to receive a double rule are going to be our total liability and stockholders' equity, and then also our total assets. Finally, of the following, which amounts should be equal? Well, the two amounts that should be equal, if we're going back and taking a look at, when we first started accounting, assets equal liabilities plus owner's equity, it's going to be the same thing that applies here. Our assets are going to have to equal our liability and our stockholders' equity. Next, we're going to move on to step number 3. On step number 3, we're looking at the assets section of our balance sheet. So to begin with, we've got our adjusted trial balance, our statement of stockholders' equity, and our text selection list. So it lets us know maybe some sections or identified some titles that we might be using. Very helpful. So first thing we're going to look at here is the adjusted trial balance and statement of stockholders' equity. It's up above. To find the asset section. Prepare the asset section of the balance sheet. That's what we're looking to do. So our company's name is Superior Corporation. And this is going to be labeled as our balance sheet. And this is going to be for December 31st, 20 We will title this section, as you know, this is going to be the asset section of the balance sheet. Assets. Then the first one we're going to start dealing with is our current assets. We have our current assets and we have our planned assets. So the first one we've got is cash. What's our cash balance? Well, we can look in our adjusted trial balance for that. So this is going to be $43,355.47. Our petty cash amount is going to be $200. Next, we've got our accounts receivable, $16,305.45. Now we have to account for the allowance for uncollectible accounts. So it's gonna be less. We're gonna subtract that amount. So our allowance for uncollectible accounts is gonna be $2,484.22. We're gonna need to find the difference of those. So $16,305.45 minus the allowance for uncollectible accounts, which is $2,484.22, and that gives us $13,821.23. Then we're going to continue on to get our merchandise inventory all the way down through our interest receivable. We're going to find those right here. So I'll start filling these out. Merchandise inventory is going to be $81,017.26. Supplies office is going to be $777.65. Supplies store is going to be $516.36. Our prepaid insurance is going to be $2,800. Notes receivable is going to be $4,960. And our interest receivable is going to be $95. Now, once we've added up all of our current assets here, our amounts here are, so our total current assets, if we were to add all this up, it's going to come out to be $147,542.97. And that takes care of our section on our total current assets. The next section we have is our plant assets. Then we can come up and try to find our office equipment. Our office equipment is going to be $19,916.14. Now we're gonna have to subtract that from the accumulated depreciation. So this will be less here. And that amount is going to be going to be $12,436.20. 20. Yep. We will then subtract these from each other. So we get 19,000 minus $12,436.20, which gives us $7,479.94. Then we will find out how much our store equipment is worth. So store equipment is $47,318.49. And we're going to subtract our depreciation for the store equipment. And that's going to be 16,626. And no cents. We'll subtract those from each other. $47,318.49 minus 16,626, which gives us 30,692.49. Now what we'll do is we're going to go ahead and add our value of our office equipment plus our store equipment, which is going to give us our total planned assets. For a total of $38,172.43. Now what we'll do is we'll add up our total current assets plus our total planned assets to come up with our total assets. And that gives us a total of $185,715.40. And that takes care of the asset section of our balance sheet. Next, we'll be going to section 4. Section 4 is our liabilities and equity section. We're going to be using our adjusted trial balance, statement of stockholders' equity, and again, it does list those titles for each of the blank options down below. Very helpful. So to begin with, I'm going to scroll through our asset section, and we've got just down below that where we're going to go ahead and get started with our liabilities. To begin with, the first section is going to be our current liabilities. We're going to be pulling our current liabilities from our adjusted trial balance. So our accounts payable right here, all the way down through to our dividends payable right there. So I'll be pulling all these amounts from our adjusted trial balance. So accounts payable is going to be $13,191.28. Sales tax payable is going to be $2,859.71. Employee income tax payable is going to be $760. Social Security tax payable is going to be $1,618.45. Medicare tax payable is going to be $378.51. Health insurance is going to be $368. Retirement benefits payable is going to be $372. Unemployment tax payable is going to be $237.62. Our unemployment tax payable is going to be, for state, is going to be $117.94. And then our federal income tax payable is going to be $3,879.69. And then our dividends payable is going to be $3,000. When I add all of these up, it's going to come out to be $26,783.20. And that accounts for our total liabilities. And that takes care of our total liabilities there. The next section we have to complete is going to be for our stockholders' equity. We're going to be pulling our stockholders' equity information from, as you might guess, our statement of stockholders' equity here. So in our statement of stockholders' equity, we're going to first look for what it is our capital stock. So we've already done the work for this in our statement of stockholders' equity. So we're looking for our capital stock amount. And our capital stock amount is going to be for $82,500. Then we have our retained earnings. Again, we've already done the work for this as well. So our retained earnings for this is going to be $76,432.20. Now we would add these together. Now we've already done the work for this as well. So if we go back here to look at this, it's going to be total stockholders' equity, $158,932.20. So we'll record right here our total stockholders' equity. And that is going to be, as I said before, we've already done the work for that, $158,932.20. So finally, we're going to go and add up our total liabilities and stockholders' equity. And what we'll do is we'll add these two amounts together. So we'll take our liabilities, which is going to be $26,783.20 plus $158,932.20. And that comes out to be $185,715.40. What we're hoping is that our total liability and stockholders' equity equals the total number of our assets. And look, there it does. Right there, it equals each other. So we're perfect. That takes care of Chapter 16-3, Working Papers.